Good morning. Today, in light of the rumored IPO of Lyft and Uber, I would love to talk to you about how to value a business like Lyft. I believe the key input to valuing Lyft or Uber for that matter is understanding the strength of the company's competitive advantage and its growth opportunities. Now, when it comes to Uber, the company's most important source of competitive advantage, the source of its moat, is the network effect the company has. In other words, the more users use Uber, the more drivers join Uber, and this sustains the platform. It's a typical so-called two-sided network. So the crucial question that anyone investing in Uber has to ask is how large and how extensive is the network effect that Uber possesses. Now, network effects are tricky. I'll just want to focus on two facts, two key aspects of network effects today. First, not all network effects are created equal. And what I mean by this is some networks are much more dense, have denser meshes, as opposed to others which are more like hub and spoke systems. So take the example of MasterCard or Facebook. These are some of the strongest companies in the world in terms of competitive advantage because they have the deepest and most credible network effects. Now, on the other hand, look at a company like Western Union. Western Union claims that it has the largest number of points where you can send money from in the world. And they are technically correct in this aspect. But not every point on the network is equally valuable, now is it? Because it turns out there's a lot of people sending money from Mexico City to Chicago, and quite a few people sending money from Manila to to Chicago. But there's not a lot of people who send money from Mexico City to Manila. So the Manila to Mexico City route is not that valuable. So in other words, a local competitor can arise that will only service a Chicago to Mexico City transfer of money, and they can undercut Western Union's fees because a new competitor doesn't have to recreate the entire network to be a viable competitor. So that's really a question. How deep and how meshed is the network that a company has? Now, when it comes to Uber, I think the question you really have to ask is the network effect that's in play here. Is it regional? Is it city? Is it a national network effect? Or is it a global network effect? So I think in a case of a company like Moody's or Visa, we are really talking about global network effects. If you want to recreate a payments network that only works in the United States is a lot less valuable than one that allows you to transfer money globally. Same thing for Moody's. If you are a credit rating agency and you only rate bonds that are issued by one country and your ratings are only accepted in that one country, then that's very difficult to undermine the network effect that Moody's and S&P Global have. So when it comes to Uber, I think the simple fact that Lyft still exists and is still alive shows that the network effect is not nearly as strong as people expect. In fact, there are local competitors to Uber in many parts of the United States. In New York, for example, there's at least 4 other companies, including one operating as a non-profit and created by the cab consortium. Now, the fact that Uber was in China and in fact was pushed out of China by a company called Didi is another piece of evidence showing that the network effect is not nearly as strong. Because really what matters to you, the user, is how many cabs and how many cars are in your local city. Very few of us constantly travel back and forth to China and are not willing to install another app to be transported in China. So what matters is the number of Ubers or Lyfts in your local vicinity, in your local city. And the same thing goes for the drivers. The drivers don't really care that there's a lot of riders in Shanghai, for example. And as a result, you can see that Uber was not able to win the cabs or the ride-sharing wars, if you will, in China. And as a result, it's been pushed out of China by a company called Didi. Now, as part of the deal, Uber now owns a share in Didi. But guess what? Didi itself, you would have thought now after Uber left would have the market to itself. Not true. Within the last 3 months, Tencent and Alibaba have all announced their own ride-sharing efforts. So even Didi's profitability is far, far away because they're going to be competing against two other gigantic companies that are well-resourced. So when it comes to Uber in the United States, the crucial question is, how deep is the moat? How big, how strong is the network effect? And the stronger it is, the deeper it is, the higher the sustained margins that the company can have. But right now, based on what we're seeing, we don't believe there's much of a moat when it comes to Uber. Uber and Lyft and other regional competitors seem to be destined to continue to fight a vicious price war. And as a result, we're not very constructive, and we'll be avoiding an Uber IPO whenever it may come. Thanks, and I look forward to your questions.